Pickup trucks have become so imposing over the years, and apparently this is a problem.
Pickup trucks have grown bigger, flashier, and far more expensive over the years, but the illusion of unstoppable value has finally shattered. Dealers who once demanded full price for every shiny Ford, Chevy, or Ram are now slashing $30,000, $40,000, even $50,000 off sticker prices just to move metal. What was once a sign of exclusivity has turned into a desperate clearance sale, revealing that the real scam wasn't the deal, it was the sticker itself. For years, automakers trained buyers to believe that the MSRP was sacred. Pay it or lose your chance, they said. But now, those same trucks sit in endless rows, unsold and unwanted. The tide has turned, and the buyers hold the cards. The rise of the $80,000 pickup. It wasn't long ago that a working family could buy a nicely equipped truck for about $40,000. It wasn't stripped down, but it wasn't a luxury limo either. Just a solid machine that could tow, haul, and handle daily life with pride. Then the pandemic hit. Supply chains broke, dealers claimed inventory was tight, and manufacturers used the chaos as cover to jack prices up by tens of thousands. Trucks that used to cost $40 jumped to $60K, then to $80K and beyond. Automakers like Ford, Chevy, and Ram wrapped corporate greed in the language of limited supply. Buyers paid anyway, emptying savings accounts and signing 7-year loans at inflated rates. As one industry analyst put it, automakers weren't chasing demand, they were creating panic. But now, that illusion has cracked wide open. The same trucks that were once marketed as rare treasures are piling up on dealer lots, unsold and heavily discounted. From shortage to surplus today, truck lots are overflowing. You walk into a dealership and see rows of Silverados, F-150s, and Rams lined up like dominoes in the sun. The salesman's tone has changed. Suddenly, you're not the one begging for a test drive. They are begging for your signature. According to automotive market experts, every unsold pickup costs the dealer thousands of dollars in floor plan interest and storage. The longer a truck sits, the more desperate the dealer becomes. That's why the massive discounts you're seeing aren't generosity. They're survival tactics. The automakers and dealers know the clock is ticking. As veteran auto journalist Lawrence Ford explained, this isn't about moving trucks, it's about saving balance sheets. The sticker price scam. For years, dealers used the MSRP, the manufacturer's suggested retail price, as a weapon. It wasn't a suggestion, it was an ultimatum. But now, the curtain has been pulled back. Imagine walking up to a truck with a $90,000 sticker, only for the salesman to whisper, "For you, 60." That's not a discount. It's an admission that the original number was fake. Inflated prices, phony add-ons, and market adjustments were all tools to keep profits high while convincing buyers they were lucky just to get in the game. The spell is broken. As auto industry consultant Mark Laskin explains, the moment buyers realized that the $20,000 discount wasn't a gift but a correction, the whole illusion of value collapsed. The automakers panic. This collapse didn't happen by accident. The auto industry is ruled by deadlines and quarterly goals, and this year those deadlines became detonators. Model year changeovers forced dealers to clear old inventory, and federal policy deadlines on electric vehicle tax credits only added fuel to the fire. Suddenly, manufacturers like Ford, GM, and Stellantis were racing against the calendar, not to innovate, but to dump unsold stock before bonuses and stock prices took a hit. As one insider at GM revealed, "We didn't cut prices because we wanted to. We did it because Wall Street demanded volume, no matter the cost." Ford flinches. First, Ford was the first to blink. Facing pressure from investors and slowing sales, they quietly introduced discounts on their mid-level trims like the XLT and Lariat. The company didn't call it a price drop, they called it a sales event. But the message was clear, buyers were walking away. Experts say Ford's half-step shows fear. Ford tried to please everyone, the working-class buyer and the luxury customer, said auto analyst Jill Carter. But you can't serve both markets when the middle is collapsing. High-end King Ranch and Platinum models still hover near $80,000, but they're not moving. Ford's attempt to preserve its luxury margins has only highlighted the brand's disconnect from reality. Chevy's bold swing. Chevrolet took a different approach. They went straight for the throat. Chevy dropped $10,000 off the Silverado LT, the bread and butter model that most families actually buy. This was no stripped-down work truck. This was a V8-powered four-wheel drive family hauler. For many buyers, Chevy's price cut felt like a long overdue apology. Chevy admitted what we all knew, said industry commentator Tom Meeks. The trucks were overpriced from the start. The move wasn't generosity, it was strategy. By slashing prices publicly, Chevy stole attention from Ford and captured the loyalty of budget-conscious buyers who'd been priced out for years. Ram's desperation move. Then came Ram. Seeing both Ford and Chevy cutting prices, Ram detonated the market with a shocking $13,000 discount on its Bighorn trims. On paper, it looked like a knockout blow. A $60,000 truck suddenly priced in the mid-$40,000s, powered by the new twin-turbo Hurricane Inline 6. It seemed unbeatable. But industry experts saw the move for what it was: pure desperation. Ram had overreached, assuming buyers would pay premium prices for what was essentially a mid-level truck. Their massive discount wasn't a reward, it was a retreat. As one Stellantis executive reportedly admitted, "We priced our customers out. Now we're paying for it." The death of the luxury truck. The hardest hit of all are the so-called luxury pickups. Ford's Platinum, Ram's Tungsten, and Chevy's high-end EV RST models, once symbols of success, are now rotting on lots. Nobody wants to spend $90,000 on a pickup anymore. Why would they, when the same model with a different badge costs half as much down the street? Even wealthy buyers are walking away. Luxury trucks were a status symbol, said economist David Hilton, but status doesn't mean much when your neighbor just got the same thing for $30,000 less. Those unsold trucks are monuments to arrogance, proof that the market has finally rejected the idea that more chrome and bigger screens justify a mortgage-sized loan. The factory trap. Even as the market softens, the factories keep churning out trucks. Automakers are locked into supplier contracts and production quotas that make it cheaper to overproduce than to slow down. The result? More trucks rolling off the line than anyone can sell. The machine is strangling itself, said auto manufacturing expert Karen Liu. They built a system for infinite growth, but demand isn't infinite. Factories keep running not to meet demand, but to protect short-term profits, a dangerous cycle that's now collapsing under its own weight. The payment trap. When even discounts fail to lure buyers, automakers turn to their next trick: payment manipulation. Dealers don't ask, "How much can you afford?" They ask, "What do you want your monthly payment to be?" Then they stretch loans to 7 or 8 years, drop interest rates through captive financing, and create the illusion of affordability. It's a shell game. Lower payments hide higher debt, warned financial expert Jake Monroe. Buyers think they're winning, but they're just trading time for money. By the time the truck's paid off, it's worth half what they owe. The real problem: affordability. Even after all the cuts, incentives, and games, the trucks are still too expensive. Wages haven't kept up. The cost of living has soared. A $50,000 truck, even discounted, still feels out of reach for most families. Automakers call it market adjustment. Buyers call it unrealistic. This isn't just an economic issue, it's cultural. In neighborhoods where trucks once symbolized pride and power, they're now reminders of bad deals and lost savings. The guy with last year's $80,000 truck doesn't look successful anymore, said analyst Sean Miller. He looks like the guy who got played. What happens next? The automakers won't surrender quietly. Expect them to tighten supply, disguise fees, and quietly rebuild the illusion. They'll call it innovation, but it's really recovery, trying to claw back profits lost to their own arrogance. But this time, buyers are watching. The internet exposes every price cut, every hidden fee, every inflated claim. The balance of power has shifted, and the industry knows it. As the auto expert Lawrence Ford concluded, the truck market isn't collapsing, it's correcting. And for once, the correction favors the people who drive, not the ones who sell. The bottom line, the era of inflated truck prices is dying. The illusion of premium value has burned down, replaced by a wave of buyer awareness that's long overdue. Automakers built this fire with greed, and now they're the ones getting scorched.